All right, today is Thursday, September 24th, and this is a review for the stock market activities today. We have important topics on the agenda to discuss today, some clues from the options market, and of course, we have an update on some Fed statements in the headlines segment, and of course, we will look at charts of the SPY, the Qs, the dollar index. The dollar index was very important today, and of course, Tesla, Apple, and here is a new one, Freeport McMoran. So here we go. The Dow Industrial Average closing in the green, 52.31 points, or an increase of 0.20%. The Nasdaq in the green, 39.28 points, or a gain of 0.37%. S&P 500 in the green by 9.67 points or 0.30%. All the indices managed to close in the green, although well below the highs. What about the sector's performance? Materials taking the gold, utilities for silver, real estate taking the bronze. Interesting that on a day where the dollar showed some weakness, taking a break from the rally, you see materials rallying higher. And this is why we're going to cover Freeport McMoran today. The laggards: healthcare, consumer, cyclicals, and industrials. What about the futures market? Here we go. The gainers of the day: crude oil, just a little bit, and coffee. We're looking for an entry point here for coffee. And of course, we have to wait till the Brazilian farmers finish dumping. Maybe they've finished, and this is why coffee rallied today for future contracts or longer term contracts. I'm looking for an entry here in coffee. Coca in the green. Sugar, likewise, when you see oil rallying, sugar takes a hint and rallies as well due to the ethanol use in Brazil. The laggards today: OJ in the red, lumber, copper, even though copper stocks rallied today, lean hogs in the red, grains after the significant gains they had, grains giving up a little bit in longer term contracts. Moving on to the big casino, the options market, the gamblers market. The tables a little hotter than yesterday, with Apple at number one with about 2 million options traded today. 62.5% of those were calls. At number two, what is new? Tesla, 1.2 million options traded today. 55.5 of those were calls. Nikola at number three, 417,000 options traded today. 29 of those were calls. And you see the majority of the bets here that this company is going all the way down to zero. Some notable action in the market today that could give us some hints about the action tomorrow. Here's a trade for Amazon for the 3,050 call. So a spike in volume today. That is of course expiring tomorrow, so they're betting that Amazon would rally a little bit tomorrow. Likewise, Tesla, the 395, unusual activities there, higher volume, high spike, betting that Tesla rally at least all the way to 395 by tomorrow's closing. And when you look at the change in open interest, you can see that Tesla puts are being closed, meaning the shorts are taking profits. That could pave the way for a rally in Tesla shares tomorrow, perhaps all the way to the 400 level. And of course, we do have FCX, Freeport McMoran. If you remember, last Friday, I found a trade, a very bullish trade, unusual for October. And I told you I took a different hint from that trade. I took it as a bearish signal, and I immediately bought puts against my long position in Freeport McMoran. What do you know? That trade worked amazingly because Freeport declined significantly this week, and the puts that I bought protected my ass. Today, when I saw the action in the dollar and in the options market, I closed the puts, all of them, took my profits, and I now sold puts instead in Freeport McMoran. We will talk about that a little more when we look at the charts. But for now, you see that Freeport shorts are closing their puts, taking profit. Perhaps that is a signal that Freeport might catch a short-term rally here, which would be an equivalent of a decline in the dollar, which would be an equivalent of a mini rally in the indices. You gotta be smart. You gotta put the pieces of the puzzle together. Moving on to the headlines that shape the day. And the first headline in the morning, unemployment claims, the weekly unemployment claims that is, coming in 870,000 versus an expectation of 850, so beating expectations in a bad way. No worries, the market of course took that as a bullish signal and it started rallying right after the bell in the morning. And here is of course Goldman Sachs downgrading the fourth quarter GDP expectations from an increase of 6% to now only 3%, cutting the expectations in half. And that is of course due to the lack of stimulus according to Goldman. But don't be scared because we do have the king of hashish, the St. Louis Federal Reserve President James Bullard. Jim Bullard of course has a very hardcore pornographic expectation of the GDP in the third quarter. He says it's gonna be 35% or even more. He declared that the recession is over, and now, of course, we're seeing the effect of all the drugs that Jim Bullard been consuming the last few weeks, perhaps months. And now he's saying, of course, by the end of the year, we will have a full economic recovery. COVID crisis, poof, gone. By the end of the year, if you're still unemployed, that is because you are a loser. And of course, if the Ozark mob in Missouri wondering where their stash of hash disappeared, check out Jim Bullard's house. You might find it over there. And here is of course Evans, the Federal Reserve President of Chicago, giving a complete and different picture than Bullard, saying that without a stimulus, the outlook for the economy and the GDP will not be as good as they expect, meaning that the stimulus is critical for the Fed's outlook to be correct. And we're talking, of course, about the consensus Fed outlook, not the pornographic outlook of Jim Bullard. And of course, we saw the Boston Fed and the Cleveland Fed, pretty much every Fed member disagreeing with Bullard. Bullard is the only one who's living in Neptune in a world of his own. And by the way, if Bullard is right, the recession is over, quarter three GDP will exceed 35%, and by the end of the year, we will achieve full economic recovery, then why do we need a stimulus in the first place? And why is the Federal Reserve continuing to expand their balance sheet? Next time, any of you in the media, CNBC, Bloomberg, whatever, when you have Bullard on, ask him this question. Moving on, we are seeing, of course, our record in insider selling of stocks. Executives are dumping stocks like there is no tomorrow. The rats are jumping the ship, breaking records, of course. However, rest assured, the Robin Hoodiots are there to the rescue. They exchange the stocks that executives are dumping and they hand their hard-earned cash to the executives and they buy the lottery ticket that will collapse on their little heads. They will lose everything. The Robin Hoodiots are the best thing that ever happened to corporate insiders. And you see, of course, the Hoodiots are stampeding again, buying calls, looking, of course, to repeat their performance before the September crash. We will see if that's gonna work or not. I think I have a clue of how this one is going to end. Moving on, we do have the vaccine czar, the snake who's called Monsif Slaoui. Monsif Slaoui is a very mysterious character. People know very little about him, but I did a report exposing this thief in details. He is, of course, a board member in Moderna and many other pharmaceutical companies. He has stock ownership in many pharmaceutical companies, specifically Moderna. And this is the guy who's been trusted with billions and billions of dollars of taxpayer money in the Operation Warp Speed. His conflict of interest with pharmaceutical companies is disgusting and is something that you would see in a banana republic, not in the leading country of the world. Do we really think that Monsif Slawi is acting in good faith when he funneled hundreds of millions of dollars of taxpayers' money to Moderna to develop the COVID-19 vaccine? Are we that naive? Moderna has never produced any product before, yet somehow hundreds of millions of dollars found its way to Moderna via the vaccine czar. And now that the media and watchdogs are talking about this conflict of interest of Monsif Slawi, who is, by the way, a personal friend of Stefan Bencel, the CEO of Moderna. He's complaining and saying, stop bullying me and stop distracting me. I'm a Democrat. I have no conflict of interest, and I will donate all the proceeds from the gains in any stock that I own to charity. Trust me, I will do that. We have to take his words for it, of course, because a federal judge decided that Monsif Slawi is not obligated to register as a government agent, and therefore he has to liquidate his conflict of interest from owning stocks in pharmaceutical companies. And he's now claiming that this is his retirement, and stop it with the conspiracy theories. It's just his retirement. What is he gonna do? And that is exactly the problem. The vaccine czar has his entire retirement tied up to pharmaceutical companies, certain pharmaceutical companies. Do you really think he's not gonna benefit those companies? Is he in good faith going to crash the stocks of the companies where his damn retirement is tied to? Absolutely not. And of course, we have now Senator Elizabeth Warren raising that exact point, calling for the vaccine czar Monsif Slawi to resign. Make no mistake, if the vaccine is produced, the public will not trust the vaccine at all due to the conflict of interest from the vaccine czar himself with pharmaceutical companies. Moving on, we do have the President of the United States, Donald Trump, who declared yesterday that he might not accept the election's results if it turns out that he lost the election rather. The president is saying, hey, look, if Biden wins in November, I'm going to take a look and see. And if I see things that I don't like or things that I assume are not fair to me, I will not accept the results. What does that mean? Is he going to stay in the White House? Or we have to send the military to evict him out? This is the kind of risk that market participants have not factored in yet, have not priced in yet. This election is going to be a mess, and we're probably not going to find out the results for days, maybe weeks, even months. The VIX futures are elevated all the way to December, indicating that we might not find out who the president is, the next president that is, until December. Are you prepared for that? Of course not. The dummies and the gamblers in the market, of course, pay no attention whatsoever to that kind of volatility. In fact, you see the VIX struggling to rally due to the complacency of market participants. They're not buying puts, they're not buying the VIX, they're not factoring in all the mess that we could find ourselves in this election season. Furthermore, did anybody factor in this scenario where Biden and Trump are tied 269 to 269? Are we prepared for this mess? Don't tell me that this scenario is not on the table. After all, we are in the year 2020. Moving on to the heat map analysis. As you can see, the dollar-sensitive sectors such as metals, industrials, consumer defensives, catching a bit today due to the weakness of the dollar. Big boxes of technology rallying again due to the gambling in the options market and the stampede of call buying being resumed. An interesting box in the green is Goldman Sachs. I might be looking at opening a position in Goldman Sachs. All the gambling mania that happened in August and September will be very good for Goldman Sachs Sachs revenues because they do have a lot of trading revenue in their model. I'm still looking at it, but I'm expecting a monstrous trading revenue for Goldman Sachs this quarter. And of course, you see the semiconductor sector doing well today, perhaps indicating further gains in the technology sector, at least in the short term. Moving on to the rotation trade analysis. And as you can see, we're seeing gains here and there, but muted picture across the board. Notable exceptions, of course, Peloton, Zoom, and DocuSign. We talked about these names yesterday. You know that I placed puts against these names, and I told you the correction isn't over until these names get hit as well. And now you're seeing that the correction is finally reaching these three names. Moving on to the charts analysis. Starting, of course, with the SPY, the S&P 500, from a daily perspective. The chart doesn't look good to my eye. It looks like the SPY is looking to visit the 311 level very soon. However, when we look under the hood, 15 minutes chart, as you can see, the SPY managed to recapture the support of 323. That is bullish. In the short term, we will see if the SPY will build up on the support it captured today or whether it gives up. And if it gives up, 311 is the next destination. And what is the destination for the bullish scenario? It is 343, although I'm very doubtful that we will get there. Shifting to the chart of the Nasdaq, the triple Qs, a daily perspective. We are still capturing the support of 260 yet again. However, if we break the support, we will hit an air pocket and the next support is all the way at 237. So watch out, breaking 260 is very negative and it is a shorting signal for the Qs. And of course, looking under the hood, 15 minutes chart. This is the action of the Qs today. And as you can see, it looks like it is forming a head and shoulder pattern from a 15 minutes perspective, indicating further downside. It is on the table. You have to be open-minded to that likelihood. And of course, the other thing I want to show you is the action in the Qs from a 15 minutes perspective compared to the action in the dollar index from a 15 minutes perspective as well. The correlation was amazing today. I released a series of tweets indicating that you should watch the dollar index chart due to the correlation between the chart and the Qs. And as you can see, between 7:15 and 7:45 Pacific time, 7:15, the Nasdaq reverses, trading lower, and you see the dollar catching a bid. And at 7:45, as the dollar chart reached its resistance and failed from that resistance, got rejected, trading lower, you see the Qs at exactly 7:45 catching a bid, reversing and marching higher. All you had to do today if you were a day trader is watch the dollar index chart. The moment the dollar index got rejected from its resistance, which I identified in a tweet ahead of time, the 94.60 level. The moment you saw that rejection, that was your indicator to close your puts, just like I did. And perhaps if you wanted to go long and catch the rally in the Qs, you could have done that. I didn't. I just closed my puts and my short triple Q calls. And what do you know? As the dollar continued to slide, the Qs continued to rally until, of course, it reached the support level that I identified to you in a tweet ahead of time, the 94.25 level. As you can see, once we visited that level and the dollar started to rebound, you saw that the Qs started to reverse, losing and giving up lots of its earlier gains. That was your signal right there if you're a day trader and you hop in the long side on the Qs to lock in and take your profits off the table. Very easy day if you're a day trader and you are watching the chart of the dollar index. And as you can see from my daily chart of the dollar index, it looks like it is taking a break or took a break today. Yet I see more gains from this move. I don't think the dollar is finished yet. It will perhaps take a break for a day or two and then resume the rally again. That is at least my 2 cents. Moving on to a chart of Tesla. You see the wedge working perfectly. The moment we reach the lower trend of the wedge, Tesla reversed and started the rally. Where is the next destination? It could go all the way to the upper limit of the wedge, of course. Back and forth until Tesla decides to make up its mind. My bet, it is to the downside. And if we see Tesla rallying tomorrow, I will place a short against Tesla. And of course, we do have Apple. Here is a daily chart of Apple, and you see Apple defending the 106 level once again. That is bullish behavior, and you see the Qs rallied right away after Apple defended the 106. Once we break below 106 and we close there from a daily perspective, that would be your signal to short Apple, and it will signal more pain, perhaps significant pain for the overall market, specifically the Qs. And here is the new chart, of course, Freeport-McMoRan. As I told you, I closed my puts, and what I did instead is I sold some puts, specifically the $14 puts expiring next month, October 16th. You're of course looking at a weekly chart of Freeport. Now we might see a bounce here, a very short-term bounce in Freeport, but when the dollar resumes the rally, you will see Freeport reversing to the red destination again. The support of course is at 1370, and the bet I'm making, of course, if we reach 1370, we catch the support and we rally from there. We will go all the way to October and then we'll reassess. Let's say the Freeport is trading at 15, 16 bucks when we reach October expiration. Then I will exercise my puts that I sold and I will acquire shares of Freeport, adding to my position at the price of 14 bucks. If the shares, however, continue to slide, I will keep the cash, the proceeds from selling the puts. And now let's conclude this video. Pretty muted, pretty boring day. It was very volatile if you're looking in the intraday chart, but all in all, we didn't do a lot today. And of course, the most important chart to watch tomorrow is Tesla. Watch the weekly chart of Tesla. If Tesla reverses and crosses the average in the MACD indicator, creating red impression in the histogram, that would be your signal to short Tesla, and it would be a bad signal for the momentum trade in the market. This is what I'm watching tomorrow at least.
If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.